Great. Thank you all for joining this panel session today on accelerating digital transformation in banking. And a big thanks also to FinTech Americas for hosting this event. I'm David Vergara. I'm going to be moderating our discussion today. So with neobanks making a big impact globally, really what we want to get an understanding is as the heart of kind of modern banking with this fully digital approach, how are they actually shaping and influencing this space? And as the banking industry, I think, navigates increased fraud and consumer demand for expanded digital services, how will the neobank model influence the future of banking, right? Where are those intersection points and where's that influence? So today we're going to discuss timely digital banking topics. I'm also going to get some great insights from key industry experts, two very distinguished digital banking leaders. And we're going to talk about some industry trends, consumer behavior. We're going to talk about some of the security technologies that ultimately address kind of both of these areas. So with that, I'd like to introduce our two panelists today. The first is Tariq Karan, CEO of Time Bank, based out of South Africa, and Dominic Pym, co-founder of Upbank, based out of Australia. Thanks, both of you, for joining our panel today, and welcome.
Thanks for having us.
It's good to be here.
Yeah, great. So I'll tell you what, let me kick things off, Tariq, with you. And maybe if you could share, tell us a little bit about kind of the customers in your region. How have they been utilizing digital banking services? And maybe you can kind of compare and contrast, prior to the pandemic and, during the pandemic, how that's kind of evolved.
Yeah, thanks. Look, the South African digital banking market is still fledgling, right? There's us and one other, and I think there's probably another one going to enter soon. One of the distinctive features of our business model at Time Bank is the fact that we're a digital bank that makes extensive use of physical touch points. Now, this is really important in a developing economy like South Africa, because the vast majority of our transactions are still in cash, which means we need to get cash in and out of the accounts in a very ubiquitous and seamless manner. And then face-to-face engagement is still quite important. Now, these physical touch points aren't ours. We partner with other organizations that are in close proximity to our customers. Now, we all know about this organic shift in digital adoption during the pandemic, and we've certainly benefited from that. So for example, the number of unique customers buying airtime, data, and electricity off our electronic platforms increased threefold during this period. But we've also seen an increase in engagement in our physical touch points, right? So these are customers that will deposit and withdraw money at our retail partners, and it will onboard through our kiosk technology in these partners as well. So, for example, card swipes at Time Bank have been 4 times higher than cash withdrawals. They've also been twice as many cash deposits at till points than there have been electronic deposits, and 4 times more customers have signed up with us at our kiosk than online. So again, just emphasizing the importance of physical touch in a developing economy like South Africa.
That's very interesting, and some good points too, just in terms of the methods in which customers are interacting. Dominic, what are your thoughts on this one?
Yeah, it's an interesting one for us. So we were the first digital bank to launch in Australia, whether you call Challenger Bank or Neobank. But there's a whole plethora of them now, and we still manage to maintain market leadership. So we're about sort of twice the size of all the others combined. So we're enjoying, I guess, first mover advantage. For us, we've not seen a significant change in the behaviour or the market dynamic during the pandemic, mostly because in Australia it's a very well-developed banking market. So the market is dominated by 4 big banks. They're also amongst the top 10 companies in Australia, and amongst the top 25 most profitable banks in the world. So the market is sort of dominated by these big four players. And, we have something like 90% saturation of point of sale, sort of touch points for NFC. So most Australians are not using cash. And although we do also have a partnership with the post office here. So we put in place a relationship that gives our customers access to 10,000 free ATMs, so they can access their money, and then also around about 3,500 physical points of presence across the post office system for people who do want to use cheques or cash. In Australia, cheques are almost non-existent, and cash is sort of fairly unusual. Most businesses during the pandemic have refused to accept cash, and so if you don't take your digital wallet with you on your mobile phone, then you can't buy anything. So that's probably the main sort of behavioural change that we've seen. In terms of the impact on the business, I'll just lead by saying that, for us, we're one of the fastest growing banks in Australia, even though we're a new bank. And we've sort of experienced extraordinary growth in the last couple of years. So for us, we've gone from nothing. We've done over $12 billion worth of transactions already. And we have seen about a 7-fold increase in transactions in the last 12 months. And just for example, we've had nearly $4 billion, so over $3.5 billion in deposits. And we've seen those deposits increase about 9 or 10 times in the last 12 months, which means during the pandemic, about a third of all of our deposits have come in the last 12 weeks. So I guess what I'm saying is that we're seeing a rapid acceleration of our growth during the pandemic. Now, it hasn't been that good for the rest of the market. A lot of our customers are skewed very young. And so we've had, 50% of our customers are between 16 and 25. And a lot of them had jobs in hospitality or, were at university or had, low income. And a lot of them have suffered significantly throughout the pandemic, either losing their businesses, losing their jobs or whatever. So for us, it's been about making it accessible, making it easy, and everything being digital.
Yeah, good points. And I want to pick up on a point that, and a theme that both of you are calling out, obviously with a very much a focus on digital. And typically what we see is, and industry research always also backs us up in terms of this surge in fraud that we're seeing this year, whether that be, account takeover, coming through phishing, whether it's coming through the mobile malware, but certainly this surge, this significant rise in fraud. So I guess I'm going to ask, so Dominic, you first on this one, do you see that the same kind of rise or the same exposure to fraud? Do you think this is kind of something that is related to the pandemic, or is this kind of the new norm?
I think probably to start with, we've seen different rates of fraud across different regions. So certainly in the US, just anecdotally from where we sit, we've seen a lot more talk of fraud and incidences of account takeovers or breach of people's data and things like that. We haven't suffered from that as much in Australia. I think, again, anecdotally, we probably have seen an increase in cyber attacks and digital fraud during the pandemic. But, I guess for us, again, as a digital bank, we've been, again, quite fortunate, but also well planned in the sense that, for example, we don't have a username and password. That's one, the only bank in Australia that doesn't. And that has meant that the only way to authenticate for our accounts is to be tied to the actual physical device. So you can't have a sort of man-in-the-middle attack, and you can't have a phishing attack if you don't have a login. And so we've been able to minimise the impact of the attacks on Up itself, on our digital bank, although I would say anecdotally we have seen an increase in digital fraud across the industry. As I said, not as pronounced as what we've seen in the US or Europe, but certainly there's been attempts. The other thing we've seen globally has been things like, I guess, digitally powered fraud. So we've seen, for example, bin takeovers or bin attacks where, where people are using algorithms or AI, machine learning type algorithms to be able to just randomly try card numbers, for example. So most digital banks are using either a debit card or a credit card. And so what we've seen is something that's fairly pervasive across the industry and used to be a lot harder to do when you had physical devices and you could skim the device, so to speak. Nowadays, even for the last 5 or 10 years, it's not that recent, but nowadays we see massive attacks that are coming globally. For example, attacking the Australian bin range, but from a country overseas. And really what they do is they attack with very low, transaction values. And then when they get a hit, that means they've found a correct, card number and expiry date. And then they just start basically sucking money out of those accounts. And so all of that stuff is covered by the schemes. In Australia, we have a government program as well to protect people's money when it's stored with the bank. But we have definitely seen more of that type of activity in the digital era.
Tarek, what about you? What have you been seeing in your region?
Yeah, but perhaps not the similar. So, I do believe it's related to the pandemic, and there's a couple of reasons for that. So one of the dominant modes of fraud perpetration we're seeing here is actually mule accounts, right? So these are customers that open up an account and then sell their credentials to a perpetrator or a sort of a malicious party. And that malicious party then basically masquerades as a legitimate supplier of goods. Now, I think there's two reasons for that. The one is there's obviously been an increase in the reliance of online purchases, particularly in an economy like South Africa, where less than 5% of our total retail purchases are still being done physically. Then I think the other reason for that is actually just the desperation and the scams that come with coronavirus, right? So you'll get health scams, like PPE sales, government relief payouts, and so on. So I think that's the first thing. The second thing is that there has been an increase in password attacks, particularly through credential stuffing. By the way, brute force attacks as well, but more so for credential stuffing. So if, as a malicious party, I sort of come across credentials of a bunch of customers through a particular breach, I then write scripts and automate the entry of those credentials into a totally different platform, hoping that I'm going to get a hit. And let's say if pre-coronavirus days, you'll get a 0.1% hit. In this day and age, you might get a hit rate that's 5 times more than that, because there's just so many more consumers that are new to e-services and e-commerce and other forms of electronic services. So that's also been on the rise. And then I think obviously staff get targeted. Typically in my experience, staff present the biggest vulnerabilities. But I think, fortunately as a digital bank, working remotely and all the security protocols that come with that has just been a natural extension of our model.
Yeah, no, that makes a lot of sense. And with the remaining time, if we can close out with some quick insights. If you could each share, I guess, one main insight, which you've already provided a number of great thoughts here. But in terms of the neobank industry, if you just say one theme that you see playing out over the next, couple quarters of where it's going, that would be great. Tarek, why don't we start with you?
Yeah, look, quickly, I think that neobanks have really disrupted the banking sectors in various countries. There have been a number of successful ones that have grown out of existing corporates, like chat clients, and some of these have broken even because they've got existing trust affinity with the parent brand. Some of them have replicated the UI and so forth. But there are also many standalone digital banks that still have to demonstrate a clear path to commercial self-sufficiency, right? And I think one of the biggest challenges that I've seen with the new banks has been maintaining integrity of their operating leverage, right? And I've seen the cost base increase as they scamper to meet customers' needs, plugging CX gaps when the digital process breaks down. And I think over the next coming year or two, it's really up to this category of neobanks to really demonstrate that they can break even and become commercially sustainable.
I think that makes a lot of sense. Thank you, Tara. Appreciate that. Dominic, quick final thought in terms of the what's coming up for neobanks.
Yeah, sure. I think that for us, the way we've been thinking about it is that how have, say, for example, Spotify or Airbnb or Uber or these type of companies disrupted a traditional industry? And that's the way we like to think about digital banks or neobanks or challenger banks, really helping create better competition and win market share away from the incumbent banks. And so for us, the way we describe it, certainly from an up perspective, is that we call it technology-led banking, as opposed to banking-led technology. So there's a lot of traditional banks that have tried to use technology to create an advantage, and they've really suffered because of their inability to adopt technology in a meaningful way to create innovation and disruption. Whereas, say, for example, at Up, not only were we the first bank in Australia with instant Apple Pay, but we're the only bank in Australia integrated to Afterpay, and we're the only bank in Australia integrated with TransferWise. And I think that technology-led approach and that technology mindset is going to be a real differentiator for the new digital banks as they're competing against the incumbents.
Yeah, all great points, guys. I really appreciate the thoughts here. That's going to be the final question for this panel. A big thanks again to all the viewers that tuned in, and also to our panelists. So Tarek and Dominic, thank you both for joining today. And everyone else, have a good rest of the day.